So, good day class, or for today we will discuss lower of cost and net realizable value, or LCNRV. So, according to past 2, paragraph 9 provides that inventories shall be measured at the lower of cost or net realizable value. So, the practice of writing inventories down below cost to net realizable value is consistent with the view that assets shall not be carried in excess of amounts expected to be realized from their sale or use. Now, take note that asset thou shall not be carried in excess of amounts expected to be realized from their sale or use. So therefore, the inventory shall be measured at LCNRV, or lower of cost or net realizable value. So this is also application of the conservatism principle. Okay, so how to compute the net realizable value? So net realizable value is equal to the estimated selling price minus estimated cost of completion minus estimated cost of disposal. Okay, so inventories are usually written down to net realizable value on an item by item basis or individual basis. So pasabot ani, we measure the inventory on an item by item basis. So identify nato kinsa ang lower cost ba or net realizable value on an item by item basis. So isa-isahon nato siya or individual basis. So how do we account for inventory write down? So kano sa magka-inventory write down? So if the cost is lower than the net realizable value, then the inventory is measured at cost because again lower, and the increase in value is not recognized. So therefore, the increase or the difference between the cost and the net realizable value, if lower ang cost, is not recognized. So therefore, we recognize we measure the inventory at cost because lower ang cost. How about if the net realizable value is lower than the cost? So the inventory is measured at net realizable value because lower, and the decrease in value is recognized as loss on inventory write-down, So again, assets shall not be carried in excess of amounts expected to be realized from their sale or use. So dapat dili daw nato i-record ang inventory nga lower kaysa sa iyang realizable value. Okay, so if this is the case, if the net realizable value is lower than your cost, then natay gitawag nga loss on inventory write-down. So, natay write-down of inventory. So, that's why we recognize. How do we account the inventory write-down? So, we have two methods. You have direct method or cost of goods sold method, and you have the allowance method or loss method. So, according to the standard, the preferred method, which is supported by past 2, paragraph 36, is the allowance method. Note that whether direct write-off method or direct method or allowance method, the cost of goods sold must be the same. So, either ani nga method inyong gamiton, the cost of goods sold is still the same. But the preferred method lang, supported by past 2, is the allowance or loss method. So, take note again ha. So, either you are using direct method or allowance method, the cost of goods sold must be the same. So, if dili sa equal, na ay problem sa inyong computation. So, how do we account using direct method or cost of goods sold method? So, the inventory is recorded lower of cost or net realizable value, and any loss in inventory write-down is not accounted separately, but buried in the cost of goods sold. So, there is a direct method. Since direct, you need to record the inventory lower between the cost or net realizable value. Diretso, automatic. Okay, so, therefore, kung kisay mas lower, cost per or net realizable value, automatic, the value of the inventory is lower between the cost or net realizable value. Then we debit inventory end, we credit income summary, or pwede na to dira we credit cost of goods sold account. So any loss on inventory write-down is not accounted for separately. So if there is loss on inventory write-down under direct write-off method, dili na siya accounted for separately. So the entry is kanilang yun. Automatic, the inventory is measured lower between your cost or net realizable value because the write-down, loss on inventory write-down is already buried in the cost of goods sold. So included na sa dire. Okay, how about allowance method or loss method? So the inventory is recorded first at cost, and any loss on inventory write-down is accounted for separately. So there is allowance or loss method, we record the inventory at cost. Tapos if na ay inventory write-down, loss on inventory write-down, then we account it for separately. Diba, naalay inventory or loss on inventory write-down if the net realizable value is lower than your cost, or your cost is greater than your net realizable value. So, maning loss on inventory write-down. So, naalay loss on inventory write-down if the cost is greater than net realizable value or the net realizable value is lower than the cost. Okay, so the difference, di ba? Sa direct write-off method, the inventory is recorded directly kinsay lower, cost ba or net realizable value. But if na loss on inventory write-down, it is not accounted for separately. But under allowance method, you record first the inventory at cost, then adjust the nimo, we account for loss on inventory write-down. Okay, so this is the entry. If there is loss on inventory write-down, so you debit loss on inventory write-down, then we use the allowance account. That's why allowance method siya. So you credit allowance for inventory write-down. So this is credit. Okay, the allowance excuse me. The allowance account is adjusted every end of the year. So therefore, this allowance account is adjusted at every end of the year. If the required allowance increases, an additional loss is recognized. And if the required allowance decreases, so na ay gain on reversal dire. Gain on reversal of inventory write-down is recorded. Take note, however, the gain is limited only. The reversal, gain on reversal is limited only to the extent of the allowance balance. So, dili dapat sa mo exceed sa allowance balance niya mo if nakay gain on reversal of inventory write-down. Okay, so this is the entry. So, if na increase in required allowance, so you debit additional loss, then you credit allowance because again, ni-increase ang required allowance or the ending balance of your allowance account. Okay, so if napoy decrease in the required allowance, so niubos ay imong ending inventory or the required allowance, then there's a gain on reversal of inventory write-down. So you adjust the allowance, by debiting the account, then you credit gain on reversal of inventory write-down. Take note again that the gain is only limited to the balance of allowance or inventory account. Di dapat siya pwede mo lapas. Okay, this is the T account of allowance or inventory write-down account. So, your beginning balance credit because the normal balance is credit. So, normally this is same nature sa allowance for doubtful accounts kontra asset accounts. Yeah. So, beginning balance, if there's increase, diba? There's increase in the required allowance. So, that's increase. So, your debit is loss on inventory write-down, then you credit, diba, allowance, inventory write-down. Kung naka-credit siya if na-increase. But if there is this decrease, you debit the allowance or inventory write-down account and then you credit the gain on reversal of inventory write-down account. Then that is the required allowance or the ending balance. So to compute the required allowance or ending balance, so for the next year or for the first year, even the succeeding years, you just need to compare the cost if the cost is greater than the net realizable value. So again, di ba, naalay loss if the cost is greater than the net realizable value. So how are we going to classify or account the loss on inventory write-down account? So the loss on inventory write-down account is included in the computation of cost of goods sold. Therefore, we add it to the computation of cost of goods sold. And allowance for inventory write-down account is presented as a deduction from the inventory recorded at cost. So therefore, the allowance or inventory write-down account is presented as a deduction to the inventory recorded at cost. So therefore, i-record mo at cost ang inventory. If there is allowance, ato sang i-deduct to compute the ending balance of the inventory. So gain on reversal, how do we account the gain on reversal of inventory write-down account? So it is presented as deduction from the cost of goods sold. So if naay loss, inventory write-down, added on the computation of cost of goods sold, pag naay gain on reversal, we deduct it to the computation of the cost of goods sold. Okay, so let's proceed with purchase commitment. So what is purchase commitments? Purchase commitment, these are obligations of the entity to acquire certain goods sometimes in the future at a fixed price and a fixed quantity. Note that purchase commitment must be non-cancelable. So, unsay nahitabo ani? So, ni-commit ka to purchase certain number of units of goods at a certain amount of price. For example, oy, seller, supplier, enter tayo to agreement purchase commitment. So, dapat non-cancelable siya. Palit ko sa imo og 10,000 units nga tag 50. Pero paliton nimo sa at certain future date pa. 'Di ba? In the future, tapos so regardless kung pilay presyo niya on the time nimo sang paliton, because ni-agree naman ka, di-commit ka to buy 10,000 units of goods at 50 pesos. So mo gina imong bayaran at the time nga maabot na katong actual purchase nimo. So katong future date maabot siya. So dili yun na mo na gina fix, kumbaga fix na imong paliton nga units, fix na pud ang price nga imong bayaran. So if there is decline in the purchase price after purchase commitment has been made, a loss is recorded in the period of price decline. So inani nahitabo, supplier, sabot ta karon palit kog 10,000 units tag 50 pesos. So, agree na mo. So, nakaibayron na, that's 500,000 at a certain future date. But, at the end of the year, naotro ang presyo. 10,000, tapos ang price sa goods na himong 45. So, pila na siya? 450,000. But, di-commit man ka to pay 500,000, pero karon at the end of the year, tag 450,000 na lang siya. Kaya niubos iyang price per unit. Therefore, on your part, since ikaw ang purchaser, naka-incur ka og loss. Diba? There's a decline of the price. So, gansi ka og 50,000. Diba? Kaya dapat tag 450 ra sa karon, pero ni-commit man ka nga 500,000 imong bayaran. So, how do we account the 50,000 loss? So, you debit loss on purchase commitment, you credit estimated liability for the purchase commitment. So, nakay estimated liability dire nga 50,000, additional 50,000. Okay, so, loss on purchase commitment account is classified as other expense. So, this is accounted under other expense, and estimated liability for purchase commitment account is classified as current liability. Okay, if the market price rises by the time the entity makes the purchase, a gain on purchase commitment would be recorded. However, the amount of gain to be recognized is limited to the loss on purchase commitment previously recorded. So the gain on purchase commitment account is classified as other income. So what if daw on the time nga actual purchase na nimo, ang price niya nahimong 48. So that is 480,000. Kagaina from 500,000 nahimong 450,000. So gansi ka because di ba fix ka nga magbayad ka og 500,000 at a future date. But at the end of the year, kay mo prepare man ta, di ba, og report at the end of the year, tag 45 pesos la per unit, so 450,000. So nakay loss diri nga 50,000. But on the date of actual purchase, naotro na pod ang price, ni-increase ang price from 45 nahimo sa og 48. Therefore 480,000. Pilay difference ana, that's 450 so 48, so nakay 30,000 nga increase. So ginansaran imo lugi, ginansa ka nga naman, di ba? From 450 nimo sang 480. So ni gamay-gamay ang imong kung tan-awon gid nimo from 500 to 480, ni gamay-gamay ang imong loss. So naay reversal, kumbaga naay gain on purchase commitment dire nga 30,000. So pila na lang ang net nimo nga loss? So nahulog nga 20,000 na lang, di ba? So 50 minus 30, that's 20,000. So take note that the gain on purchase commitment, so this 30 is considered as gain on purchase commitment, would be recorded. However, the amount of the gain is limited to the loss on purchase commitment previously recorded. So, ang pasabot ani, dapat kani imong gain nga 30,000 dili dapat sa mulapas og 50,000 because this is the previously recorded loss. Okay, so again, limited lang sa loss on purchase commitment that was previously recorded. Sir, ang sa example na, example, at the time of purchase, nahimo siyang, butang na to, 55. That's 550,000. So, from 450,000 to 550,000, pila difference? 100,000. Diba? Ingon diri, the gain on purchase commitment, the gain is to be recognized is limited to the loss on purchase commitment previously recorded. Pila mo na record nga loss? Only 50,000. But, on the actual date of purchase, supposedly na kay 100,000 nga gain. So, question karon pila lang imong i-recognize nga gain. So, we only recognize a gain limited to the loss on purchase commitment previously recorded. So, pila raman to atong loss nga record? 50,000. Therefore, instead nga mo record tag 100,000 nga gain on purchase commitment, we only record 50,000. Because, again, limited to the loss on purchase commitment previously recorded. Okay, I hope nasabtan siya. So, what is the entry for the, this is the entry pag naay loss, pag, entry for actual purchase if there is additional loss. So, what if anay tabo, instead nga, nahimo siyang 450, niubos pag yun siyang 430. So, samot, di ba, gansi ka, 500 imong gipromise nga bayaran, tapos na imong 430. So, nadungagan imong loss. So, the actual entry for the purchase, if there is additional loss, so you debit purchases, you credit loss on purchase commitment, this is the additional loss. Then you credit the estimated liability for the purchase commitment of the katong previously nimo gi-establish nga entry. Then you credit accounts payable. So natay mga asterisk dire. Let's continue sa. So what if naay gain? What if naay gain on the actual purchase? So what is the entry? So you debit purchases, same. You credit estimated liability for purchase commitment, you credit accounts payable, then you credit gain on purchase commitment. So, let's look into the asterisk. So, you have asterisk for purchases for accounts payable. So, the first asterisk, the amount, so the purchases daw is equal to the amount lower between the fixed price and the replacement cost. So, fixed price, kato imong gi-promise nga 500,000 tapos pila tong replacement cost, pila tong actual cost of purchase nimo. Kung for example, as actual purchase nahimo siyang 48 pesos, so whichever is lower. So mas lower si 480,000. So you debit 480,000 as your purchases. Again, lower between the fixed price and the replacement cost or the actual cost of purchase. How about the two asterisks? Accounts payable. So, accounts payable, the amount to be recorded is the fixed price based on the purchase commitment agreement. Again, regardless pila ang presyo sa market, because ni-commit ka nga, mubayad ka o 500,000, then your accounts payable should always be equal to the amount committed. So, again, amount to be recorded is the fixed price based on the purchase commitment. Okay. So, for the illustration, so let's have an illustration problem.